Because if it's not about changing lives, it's not worth doing. Is that right?
Blessings come in different packages.
Collaboration over competition. I think we need more community over competition. That's enough for us all here to win.
With Black EXP Network, it's a safe space.
People that think like me, shared experiences.
Preparation for ownership, protecting our assets, and so that we can prosper.
One of the greatest things of being with EXP Realty is having multiple streams of income.
Let me tell you all, EXP Realty is the only brokerage that really allows an agent to build wealth for generations to come. People will have you to believe that EXP is a recruiting company, but statistical data, real live data, says only 18% of the 89,000 agents at our brokerage have one agent under them.
When I joined EXP, as you know, it is a virtual brokerage. So you're kind of just trying to figure out where your tribe is, where your community is. Through our online platforms, I found Black EXP Network, and at one of our events, I started to connect with people in person. And so from that, I've been able to establish relationships and build friendships, and it's like family.
If you're going to build an organization, you need to build from a place of servitude and giving.
So I'm here with Antoine Williams with 365 Sprints to assist us with helping with our movement to grow by giving us a platform with his website, with merch that will assist us in funding our educational and networking events for the Black EXP Network nationally and internationally. All right, so is it ready to go?
Yes, sir. The site is live. The site is ready to go.
I were to go
Black EXP. Yes, sir.
BlackEXP.com.
.com. Yes, sir. Absolutely.
Right. So I see we have t-shirts. I see we have hoodies. Do you think we're going to have in the future coming maybe some caps, some cups, anything else?
Oh man, we're going to have lanyards. We're going to have hats, beanies, cups, coffee mugs. If you can think of it, we're going to put Black EXP on it. Yes, sir.
Well, I love that.
Sir.
So for those that are watching right now, if you have any ideas, man, apparently Antoine said he can get it on here. So
absolutely.
We can do this.
Yes, sir.
So Antoine,
absolutely.
Thank you so much. We really appreciate you helping us with our cause and this movement for Black agents. Well, thanks again, and look forward to working with you.
Thank you, sir. Talk to you soon. Bye-bye.
Get ready for the most talked about event of the year, the Black EXP Network Mega Yacht Party. This isn't just a party, it's an experience. Step aboard a luxury mega yacht surrounded by top agents, industry leaders from across the country, and Black excellence, baby. Network, celebrate, and vibe. From the moment you step on deck, you'll know this is where luxury meets legacy. Limited pre-sale tickets will be opening soon. So don't wait, these will go fast. Mark your calendar and stay tuned, because this is one night you don't want to miss.
Well, good day, everyone. It is your favorite MBA Realtor. Welcome. Climb in here, everyone. I see our numbers are going up. I need everyone to share the link with someone else that you know can really get some value out of our call today. So come on in. I see you guys are telling me where you are calling in from. I am so excited to be here with you guys. I see Texas is in the house. Keep dropping it in the chat. I see Florida's in the house. Okay, Florida. Good stuff. We love to see it. Oakland, California. Come on, West Coast, stand up. I'm so glad to see the West Coast on the map today. Southern New Jersey. Okay, thank you for joining us. I don't feel like I'm alone by myself here in New Jersey. North Carolina is in the house. Welcome, North Carolina. Florida, welcome, Florida. I love to see it. And our prayers go out to anyone in Texas that may have been affected with all of this weather stuff going on. It's been amazing, but I'm glad to see you here. I am so glad. Yes, long time. Thank you for tapping in. Come on, I need everybody to share the link. I don't see enough numbers coming in here. Long time no see. Thank you for joining, Miss Samantha. Thank you. Come on and share the link with some folks and tell them, come on in here. Remember, this training is free for any agent that you know that is at any brokerage. We are here to pour into our community of people and help build generational wealth. And it doesn't matter where you're located, in all 50 states, and we're going to hit internationally soon with Black EXP Network. You guys stay tuned for this, for sure. So welcome, everyone. Welcome. I don't know, you guys saw that video that was just played. We had a phenomenal time at Juneteenth. I want to see who was at Juneteenth this year. Put Juneteenth in the chat if you were at Juneteenth, because I was in the building, loving on you guys, networking with you guys. It was like family, for sure. Just like our leader, Rachel Allen, said, it was about finding your tribe. So, yep, put Juneteenth in the chat if you were in the building. I mean, did you guys learn something? Because I learned a whole lot of things that I am still trying to, grasp and just put into play. But when I tell you I came out from Atlanta on fire, and it is time for us to close this wealth gap. What do you guys think? And this is why I show up for you guys every single month with something new that you guys can now use, a new tool, a new resource, something that will be able to support you, to be able to support the community of people you want to touch. And it was amazing. She's absolutely right. It was amazing. If you missed it, make sure you stay tuned for next year for sure, because we will be doing this again next year. Now, we do have our yacht party coming up. I know y'all saw that. That's coming up soon, and tickets will be on sale soon. I don't know if y'all remember last year, tickets were selling. I mean, we had a great time again, and that's going to be fun networking. Meet us in Miami for our annual yacht party. We won the best event at EXP for the year that year. So make sure you join in and see us in Miami as well if you want to see us in person. So, all right. So listen, you guys, I'm excited to be here because after coming from Juneteenth, the Close the Wealth Gap seminar, it let me know that we need to really be a community, right? We really need to have these little tools and the different things that we can use to be able to get to our clients to help them get into a home, right? So right now, y'all all know that the interest rates are going crazy, right? What interest rates are your clients getting on your loans right now? Put it in the chat right now. What interest rates do you guys see your clients getting on their mortgages now? I hope you're paying attention to that, because my client just had like a 6.75 on a closing that I had yesterday. What are the interest rates that you guys are seeing out here that your clients are getting? 5.99, okay. 5.525, that's not bad. Okay. 6.75. All right. 6.5. I see you guys. FHA loan. All right. Now, do you guys remember when it was 3%, 2% interest rate during the pandemic? I remember those days. It's like it just happened. And everyone thinks that might not happen ever again, right? I'm not saying that, interest rates won't go down, but we have to be creative in how we are really supporting our clients, right? So there's so many ways to do so. And one of the ways we could do so is through loan assumptions, right? Some people are like, what is that? What is that? No, I got y'all. I got all the information that you need to be able to help your clients with this product, right? So we have coming up next, we have a leader in the real estate industry. His name is Eric Anderson. Eric Anderson is a former Army paralegal, and he also ran some offices at Keller Williams and launched his own brokerage. And now he is part of one of the fastest growing real estate teams here at eXp Realty. He has over 200 agents right now within the last year who has joined him here at eXp Realty. And we are so excited to have him come along with us. Eric Anderson, I am so glad. There you go. I am so glad to see you here, sir.
Well, I think if I take myself off mute, that
You sound like a robot. Take your mic off and do it again.
Hold on. How about now? How about now?
Straight robot.
Okay, hold on. Let me.
Say, talk to me. Did I lose you?
Still a robot?
Yep, you are. You might have to go out and come back in. I'll hold down the fort while you do that. So while Eric gets his technology together, let me keep on going. So Eric is also a veteran as well. Eric has had real estate strategies who have brought the military market onto the table. When I tell you, Eric has been such a segue to so many different tools that we can use with this VA loan assumption. And he's going to show you exactly what he does and how he does it to be able to support his clients to get a 3% interest rate. Wouldn't you want your client to have a 3% interest rate? Can you imagine that? Now, some people think, okay, but once they get a VA loan and it's only, 15 years left on it and the 3%, what happens to the remaining amount of the mortgage? Because you guys know, mortgage are usually 30 year, right? We would love to see a 15-year mortgage, but let's be real, 30-year mortgage. So that's where we have Rome. Rome is a platform that helps buyers assume low interest rates with FHA loans or VA loans. This makes home ownership more affordable in this high rate market. So we're going to have Eric come up. He's going to show us exactly what he does to be able to get loan assumptions utilizing VA loans or FHA loans. And then we're going to have Rome. Rome is our guest. They're also in the building, and they're going to be here to show you exactly how they can help with that gap between what the seller actually is, what you're going to assume from the seller, as well as the buyer taking over the loan as a second loan. So, Eric, talk to me. Are we good now?
I don't know. Are we?
Yes, there we go.
Good. You had me nervous there for a while. Well, Michelle, I want to say thank you because I know it takes a lot for you to, get folks to come on. And I really am appreciative because you stay on me. You were like, hey, I'm going to lock you down and go from there. I'm sure you have to, corral a whole bunch of us. But I'm glad to be here today. And I'm honored to be part of the Black EXP Network. And to be able to celebrate. You see, I haven't taken off my Juneteenth bracelet since I got it in ATL, it washes well too, just to let folks know it is being washed. But anyway, but happy to be here and I'm excited to share my knowledge and go from there.
Well, listen, Eric, we welcome you. We're so happy to have you here. And thank you so much for your service, sir. And thank you for all the gems and the information you're about to drop. Y'all get y'all pens and paper ready because he's about to drop it down on us. Take it away, Eric.
All right, cool beans. Thanks, Michelle. Let's see here. Oh, fancy. This is on the slides. Thank you, Mario, who's in the background. So, hey, everybody, I just want to say thanks for joining. I'm going to come out of the private chat so I can see over here. And I'm glad everybody could come. We're talking assumable loans and unlocking new possibilities in real estate. So my name is Eric Anderson, and really I wanted to bring this forward. We were talking about it, Michelle and I, and we were talking about how to get our folks through kind of these tough times. And let me go a little further here. Let's get started here. So who am I? Michelle gave a great intro, but I'll give you guys just a little background on who I am. Eric Anderson, this is my 19th year in real estate, 20 years will be next year. Beforehand, as Michelle stated, I went into the military, came out of the military, finished up, college, undergrad, grad school, and I was working in corporate America as a e-business project manager for IBM. Left IBM in about 2006, and then started in real estate. So I've run 3 different Keller Williams offices. I've grown 3 different Keller Williams offices. I've also owned my own company, sold that to Prudential PenFed, which is now Berkshire Hathaway PenFed. So cashed out there and came over to EXP now almost 18 months ago. Well, 16 to 18 months ago. join EXP, and like Michelle was saying, I have a network of agents that we kind of all collaborate together, our Black Label Access. And we are sitting at now right at about 200, and there's about 250 of us that came over since then. And happy to be here. I service the Raleigh and the Fayetteville, Fort Bragg area. So that's North Carolina for those of you who are not familiar with those names, and glad to be here now. This is a interactive. So if you guys are in the chat, have your questions in the chat and we'll go from there, because I think it's going to be important for you guys to ask questions as we go along and as we come towards the end. I don't like presentations where it's just all about the presenter. This is really about the information and really helping you guys understand how to use the information. So with that being said, let's go ahead and get started. All right, now, and Michelle kind of stole my thunder a little bit on this one. She asked the question before I can get there. But my question is a little different. Whose clients are not paying more than 6% interest rates? And I saw some of you guys have interest rates of like 4.5, 5.5. And I know some of those are kind of some of the builder incentives and different things of that nature, which is phenomenal and awesome. But most folks right now are at that 6% or higher on the interest rates. Now, that's important because, of course, all of our buyers are saying what right now? Oh, I want to wait. I want to wait until interest rates come down. And hey, I really don't blame them for wanting to wait. I took advantage of that lower interest rate when I used my VA loan, and it would be hard for me to come out of my 2.25 interest rate. I'm just being honest with you guys, like it would be for your clients right now. So how do we make this presentable for your clients so that you can help your buyers, but also the sellers on the other side? So when we're talking, what are buyers facing now? Let's do a comparative look here. And if you guys see here, I don't know, this isn't interactive like when I first put this together, but I'll give you guys the numbers. So on this slide, we compared a $300,000 mortgage. So in that $300,000 mortgage, we're looking at one at 3% and one at 7%. And if you can see here, you got a $2,000 principal and interest versus $1,265. So there's an $800 gap in between there. And I'm using the average between 2020 and 2022. So we all know between 2020 and 2022, we were in the pandemic, coming out of the pandemic, all of those good things. And that's when interest rates, the lowest I've seen was a 2.25. I think it might have hit 2, but 2.25 was the lowest. A lot of those folks now they're sitting in their homes, but then there's a lot of folks who did not buy during that time frame. So now they're looking at a huge difference in pricing. So what we want to talk about is how do we get past that? So the hidden opportunities of the assumable loans. So I love this little Venn diagram here. My kind of nerdy piece pops out at me here. And I love it because if you look at this diagram, it kind of shows you, of course, we have conventional in here, and we know FHA because you have mortgage insurance on the FHA conventional side. But the hidden opportunities, how do we find assumable loans? So there's basically these 4 types of loans. And when we look at them, we know, I'll go back real quick, conventional loans, for most conventional loans, unless there's some type of special provision, are not assumable at all. So they have to be a government loan, typically VA, FHA, and USDA. I know we were advertising the VA side. I do a ton of VA business because, of course, I'm in a military town, right? And we have a ton of VA. But there is a lot more VA and FHA loans and USDA loans that are out there. That total combined business piece is 1.7 trillion right now. That's how much VA, FHA, USDA business is out there right now, those types of loans. So the opportunity is great right now. So when we start talking about the hidden opportunity, right? The hidden opportunity is, how do you spot them, right? So if it's an FHA, VA, or USDA, one of the things that you're going to have to really look at really is to assume the loan. The process is you're stepping right in. And we always talk about loan assumptions. And of course, we have our partners, Rome, who are on, that I met down at Juneteenth, and we're starting to do some stuff together. But all assumable loans end up in the same way. So if you have a $300,000 loan that you want to assume, the buyer has to qualify with the actual lender who has the loan. So they have to qualify with that lender. Now, they're going to always, those lenders are going to tell you that it takes too long and it's going to be longer than this and longer than that. Why? Because they don't make any money off of it. Because now you're assuming coming into a position, let's say they're 5 or 6 years in the loan. So you qualify, you take over that position, but they have to make up that gap. And we're going to talk a little bit more about that gap. That's when we're going to bring our partners from Rome on here, but also identifying them. FHA, VA, USDA loans, all typically are assumable. Now, the requirements for that, you guys probably know this. Mortgage insurance stays on the FHA loan until, of course, they become 80%, 79, whatever that number is. So how do you find lenders that these loans are interested in going through a bank? So we had a question that popped up. So I'm going to be taking questions as we go along. How do you find a lender that has these loans instead of going through a bank? So now, who's that? Antoinette. So Antoinette, you are throwing me off a little here because now I have to answer her question. So the way that you spot them, and really the easiest way, you guys have the access to all of VA, FHA, and USDA. All of us are operating typically on a matrix system, right? The matrix MLS system. That's pretty much the standard backbone throughout. If you go inside of the MLS and you're able to just do a search for, closed VA, FHA during that time frame too. So do a search for that time frame from 2020 to 2022. It'll give you the list of homes that closed out, because when you close out your MLS, what do you typically close it out with? The type of loan that it closed with: FHA, VA, or USDA. So that typically will be there. So if you do a search there, and you may have to go into your additional fields, this is a whole separate class that we can talk about, kind of searching and how to do that, because that's where I find all of mine. You can also go and you can buy these lists that will tell you FHA. I forgot, it's like data share or something, but you have access to all of this information already. So Antoinette, I hope that answers your question. I can go a little deeper on that too, but you can find that. And I'll tell you guys that when you're inside of the MLS, I searched my MLS this morning just to see how many were marketing for VA loan assumables. And it was a total of, and my MLS is comprised of 15,000 agents in the Triangle and another about 3,000 agents down in the Fayetteville area. So of those 18,000 agents in the search I did, only 16 homes came up as being advertised as, assumable loans. So that tells you that agents either don't know about it, are afraid to do it, and go from there. So now, why assumable matters. So some of the benefits, and I'll tell you guys this: huge benefits for the buyer. The savings we talked about, the 3% versus the 7%, and that ends up being like a 57% monthly savings. And I like to use real numbers and really talk practical about this, because we have, and I'll use myself for an example. When I purchased my home, and like I said at the beginning, I have a 2.2 BA interest rate, 2.25. And when I purchased my home, for, and guys, if I talk numbers and make you nervous, I'm a very blunt and direct person, so I like to share the actual numbers. So I purchased my home for $435,000. I wrote the contract on Mother's Day during the pandemic. So 435 at a 2.25 interest rate, 100% financed through VA, new construction, one of the first 15 homes in a 200 home neighborhood. So when I got in, I ended up, my PITI was $2,050. That was my principal, interest, taxes, and insurance. So now that was for my housing plan. I'm in a Pulte community. And then as the homes were selling through the community and we got to the end, the same plan in my neighborhood was selling for right at about $650. My exact same plan, down to the T. So getting in on, the huge savings. So my mortgage is $2,000. The person who came in at the very end, their mortgage is $3,400 now. So that's a huge difference because the interest rates were 2.25 and they ended up right in the sixes when the neighborhood was closing out. So that shows you the huge difference where it doesn't matter. The amount of money doesn't matter. It's the interest that you're paying on. And that's what anything from your cars to everything else. So it's a huge savings to the buyers and the benefit. Lower cost. So you skip the appraisal, reduce lender fees too. So that is a huge thing. So on over the last 2 years, I've done about 6 assumptions, loan assumptions, both on the list side and on the buy side. 4 on the list side, 2 on the buy side. So on the list side, when I'm advertising those things to the buyers, everybody's going to come in. What's the first thing they're going to say? Everybody knows the first thing they're going to say. Hey, how do I, assume this loan? They're going to ask those type of questions. And everyone's going to say, oh, it's going to take 90 days, 120 days. Everyone says, every agent who I ever mention a loan assumption to always says that. My average loan assumptions are literally all of them are less than 60 days. Now, typically more around that 45-day time frame, but a lot less than that. Now, the challenges on this is the equity gap. Because if you have a $300,000 home and you want to assume that lower interest rate and there's, 200,000 left on the loan and you can assume there, now you have $100,000 gap in between. So now how do I make that $100,000 gap? So that's why, as you can see here, I put on here, HELOC, second mortgages, seller carry back. But what we also have is we have a partner. And I think we're going to bring in partners right now because we'll play off each other. I think Mario is working in the background. We're going to bring in Rome. So Rome is a company that I just found out about, which if I would have known about them earlier, it would have made it a lot easier for some of those buyers that I had that, wanted to purchase my listings and going for, oh, there she is. Hey, ma'am, how are you?
Hi, I'm good. How are you?
Good. Hey, guys. So I know you saw this person just pop into our screen, right? So I'll let you, do you want to introduce yourself? And then because Rome is our partner because they are the solution to that gap that we were talking about, that the equity gap that the buyers typically face. So Alexis, did you want to go ahead and tell us a little bit about how you can help us on this challenge when it comes to satisfying, that equity gap?
Yes, definitely. So my name is Alexis, and I am with an eXp Solutions partner, Rome. And as Eric mentioned, we have made Assumable Mortgages our product. And one of the things that is most challenging for people to get into an Assumable Mortgage and take advantage of that 2%, 3% rate is this equity gap. And so the way that we have fixed this problem is by creating a product called our gap financing. And so basically this allows the buyer to maintain bringing as little as 5% down and financing the rest of that, in this particular example, $100,000. And so you may wonder, well, how does that affect that 3% rate that they now have assumed? And so we do offer it at a slightly higher rate than maybe today. It's 8 to 10% typically, but we find that buyers still achieve a blended rate of 4 to 5% with the remaining financed portion of the second mortgage, and with that the rest of the mortgage at that 3% rate.
So Alexis, and I hope you guys are listening to what she just said, because I think that's a powerful thing she said, where you said the buyers will step in at that 3%, just like we were talking about. They assume it, because that's the biggest challenge that I have, is where that 100,000. So yes, that 100,000 will be higher, but is there any type of penalty for paying off that 100,000 early, Alexis?
There is no prepayment penalty. It is a 30-year fixed rate mortgage, and you can pay it off at any point. So if the buyer finds it more advantageous, as many do, to pay it off quicker, that higher amount, they're able to pay that off whenever they would like.
Yeah, and I think we had a question that popped in, and this is for all assumable loans, VA, FHA, and I know USDA can be a little tough sometimes, just because of the way, but this is for all assumables, right, Alexis?
Correct.
Okay, Perfect. Teresa, I hope that answers your question. She popped into the chat there. But I think, Alexis, I think the solution that you guys are coming up with, because whenever I would market calls coming in, and whenever those calls would come in, people were always asking, "Hey, how do I assume that? How do I don't have the money difference." They had, decent credit. And I think this is a way that really gets us in there. So there was Helen also asked you a question. What sort of rate is Rome charging today, as of today?
Yeah, great question. And I know earlier someone had asked, where do they find homes with assumable loans? So Rome is also a marketplace. So you're able to see all homes with assumable mortgages, and we market what the rate of that mortgage is. So if Eric, you're selling your home at that 3% rate, it'll be up on Rome at a 3% rate. If you're talking
Alexis,
oh,
2.25. Just I want you to get that right. No, I'm just teasing.
at that 2.25 rate. And if you're talking about the second mortgage rate, right now it's about 8 to 10%.
Okay.
That can vary based off of what percentage of the purchase price someone is able to put down, and of course their personal financial details. And then if you're talking about charging for our services, we charge a 1% fee of the purchase price to the buyer. Hopefully that covers the bases.
Well, I think, and I know no one has asked this question yet, but we tend to be a little realtors. We tend to be a little selfish, so we want to know what's in it for me when it comes to Rome. So can you tell us kind of what's in it, for us?
Yeah. Listen, y'all gotta get your bag too. I understand you gotta have some skin in the game. So for all of our real estate agents, it is completely free for you guys to use our platform. We do have a lookup tool where you're able to look up any address anywhere and see what kind of loan is attached to it, whether it's assumable or not. And then we also provide marketing materials for you to take to your listing presentation if you'd like to convince a seller why they should use you as their listing agent. And you get to tell them, I can sell your home for 5% more using this tactic. And Eric, I don't know if we covered about how on the sell side you can sell for more given that lower rate.
Yep.
Should we have it that now, or should we save that little tidbit for later?
So, I'm glad you said that, because I'll go into my seller strategies, right? So I think that was right on time. Well, is this being done as a HELOC interest only? It's not a home equity line of credit that you're giving them. It's a total separate loan, right?
Yes, correct. It is a totally separate loan.
And it's not interest only. It's principal and interest, correct?
Correct.
Okay. So did she say okay? I think that was Sylvia. Okay, perfect. So when we talk about and I think we kind of went into the seller strategies, right? So assumable listings sell 15% faster and command 3 to 5% higher price. No prepayment penalties. Keep more of the money in the seller's pocket. So when you're talking about marketing to your sellers, and like I said, when I looked up prior to coming on here tonight, because I wanted the fresh data, I looked up my MLS, and I challenge everyone in there to look up in their own MLS. And I guarantee if you do a search for all active listings, and then you go down to, where you can search the all remarks and look for any type of marketing that says assumable, I guarantee it will be really thin, because most agents are not advertising that. And if they're not advertising that on the MLS, that means they're not advertising that when they go out to market to the sellers. And I use this in every listing presentation. If I don't get a listing presentation, it's typically because, and it happens. I just had a listing presentation. I told them about assumable, and guess what they said? They said, "Oh, we love you, Eric. We want to go with you. And can you do 1.5% on your list?" And I said, "I don't think we're a match, but hey, I wish you guys all luck in the world." So it will be there, and people will go from there. So now, how does it mix? Okay, I think they were trying to say, how will it remember with escrow? They said, how will this mix with escrow? Okay, yeah, okay. How will it mix with escrow? So Basically, when they're closing, Alexis, and you have, Rome on one side, they're assuming the other loan, and the attorney is about to close this deal. So it's basically, is it just a second lien that's being put on there, and the attorney or escrow accounts for that?
I did bring backup this time, Eric, because you asked some tough questions to me last time. So I got my money and numbers man, Ben. I don't know if Mario can add him to the mix. Okay, very good. For all of y'all that were there, me and Eric got into a very calm, but there was a tizzy. So I brought my backup five who could.
You brought your backup. Ben, come off of mute real quick for me, buddy. Alexis was running scared since last time, but that's okay. So, but yeah, could you kind of chime in on that, Ben, for us?
Yeah, certainly. So, our lending partner will work in tandem with the assumable mortgage lender to make sure that we close on time. So Rome helps facilitate the entire transaction. So we'll be the liaison between the assumable lender, the secondary lender, the buyer, the seller, and the agents involved in the transaction. So our goal is to achieve a smooth closing and make sure that both lenders are on the same page as we inch towards that closing date.
So Ben, this is and for some of those, when you're talking about it, it almost reminds me of sometimes when people are doing in certain markets, they do down payment assistance, where maybe a government entity is giving a certain amount of money and they take a second lien, to the property and all that good stuff, but everybody is closing on the same. Is that kind of a similar type, because you guys are closing? It's just two loans. One covers the gap. You're assuming the other portion.
Exactly. It's two loans with a simultaneous close. So our goal is to make it feel like one single transaction, but after the closing, the buyer will be paying two separate loan payments.
Two separate loan payments, because they stepped in and they assumed the position of the previous, loan, and then they'll have this new one that they'll be there too now. And this is just a question, since you're the numbers guy, Ben. So now when we have the lower interest rate that they assumed, it would probably strategically be better to pay off the higher interest rate. Just thinking out loud, paying off Rome
I
first.
think you're the numbers guy. That's exactly right. Given the secondary loan has no prepayment penalty, it's certainly advantageous to pay that one down quicker.
Okay.
And what will occur is that the blended rate between the two loans will decrease. So if you start off at, let's say, a 5% rate, but you pay down the second loan quicker, then that'll decrease and it'll inch closer and closer towards the assumable rate itself.
Yeah. So, and guys, one of the reasons we, want Ben and Alexis in on these conversations, because it's huge, because the biggest issue is that gap. That gap is the biggest issue that most buyers are encountering. And then if you're able to use this for marketing to your sellers, also, that, hey, I now have a solution too. So when someone does come and they don't have that difference and they want that lower payment, then we're good to go on that. So now, one of the risks, I think, is seller. Everybody talks about the innovation, making sure that that's cleared, which I'm sure the attorney will take care of all of that between the two loans to make sure that transferred over. And then, of course, the VA entitlement side of things. Now, typically some vets, I won't say most, I'll say some vets will not give up their entitlement, because whenever you do a VA loan assumption, just to let you guys know, typically the vet is going to want another vet to come about, because then they can swap. Sorry about that, this Apple. So that you can swap the entitlements. Now, if the vet has a large amount of entitlement, they could leave some of that entitlement on that property and then use the remaining entitlement going from there. Ben, I think Alexis was telling me you were the guy who was kind of explaining that a little bit too, right?
Yeah, I can touch on that as well. Yeah, so non-veterans are able to assume VA loans. There's actually no occupancy requirement. So an investor can purchase a home with a VA loan. and benefit from the low interest rate. So if any of you have investor clients, like this could be a great mechanism to get them back into the market. But yes, when a non-veteran assumes a VA loan, the veteran's entitlement will remain with the home for the duration of the loan. So what that means is that the veteran can't use that allocated entitlement on their next purchase. So if they will still have a remaining entitlement that they can use to purchase their next home, but it's really a math equation for them as to whether or not it makes sense to part ways with their entitlement.
And I don't mean to sound like the Grim Reaper, but this just happened to me on one of my listings. I had one of my older fraternity brothers. He passed away. We were selling his home, and guess what? He had a 3% interest rate. And it was a VA 3% interest rate. Now that VA entitlement can't be transferred to, someone else who, like he was a single guy when he passed away. So it's on the property. So we ended up selling it to an investor, but the investor was actually exploring assuming the loan because of course that loan, if you have someone who passed away, they're not going to be needing that entitlement anymore because they have now passed away, and that entitlement now can stay with the home and go from there. So we have a couple questions here. So I want to make sure I hit these questions as we're going through. What does the VA seller need to do in order to have the list of property with an assumable option? So you guys chime in, Rome, when you get a chance, but for a VA seller, the first thing you're going to have to do is reach out to the lender to find out, hey, all the details, hey, what kind of loan to list, all that. You just want to have those details up front. But if it's a VA loan, it's already assumable. You can list it just right off. I mean, if you have a VA home that you have listed right now, you can go out there and say VA assumable loan. But of course, put in the protection piece, subject to lender approval so that you're covered on that side. Guys, did you want to chime in on that? I think that was pretty straightforward on that one.
Yeah, all VA loans are assumable by law. So if the seller has a VA loan, then the loan is inherently assumable.
Yeah. See, Ben's the numbers guy. He knows this. And can the buyer refinance the second loan later? So
yeah.
The one. Okay.
Definitely. So the loan is prepayable at any time with no penalty. So they can totally prepay it whenever they please.
Okay, perfect. I hope that answers your question there, Tony. And how much entitlement do they have? I'm confused. So there is, and I don't know the complex calculation. I'll leave that to the mortgage folks. And Ben, I'm not sure if you know what that total entitlement, but a certain portion of the entitlement goes towards the home. It just all depends. But I would check with the lender first, because the lender will know specifically for your client how much entitlement would be left on it, because as you're paying down that home and paying off, because I had a client one time who had a VA loan, and he owned all three properties. He had one in Texas, he had one in Fort Gordon and Augusta, and then he bought one in Fayetteville with Mean, where he had to use a portion of that, very similar to Rome, was because he was over his VA entitlement limit, where it ended up being like $50K that he ended up having to do in like a conventional 5% down something. So I think
Yeah.
Did you want to chime in on that, Ben?
Yeah, sure. So the VA entitlement allocation is based on. Did I just disappear?
Did your lights go out, Ben? We can still hear you.
I don't know what's going on. There we go.
There you go.
Sorry about that. So the VA entitlement allocation is based on the county where the property is. So the standard entitlement is $806,500, and then it goes up if it's a higher income area per se. And so just like we can use simple numbers here, but if the veteran purchased a home for $300K, then they use $300K of their entitlement for that home. That means they would have $500K of entitlement buying power remaining to use on another purchase. So if they want to buy a home more than $500, then they would have to use a partial entitlement. But if their next home is, call it 400 to 500,000, then it may make sense for them to part ways with that 300,000 entitlement that they originally used.
Yeah, and I think the time where veterans, if you're going to go out and use your VA loan to buy that dream home, that's because there's no, as of January 2020, there's no limits on as long as the lender approves you can, but you would have to use your full entitlement, but you can buy a million and a half home if you're approved for it, but that would use up your your entire entitlement. So you wouldn't have anything else left to take it anywhere else. And I think we have a couple more questions. Let's see here. And this is why folks do vet do family assumptions. Other thing, if the person defaults on that did the assumption, let's say they left a portion of that assumption with the home. If the person defaults, is the previous owner now responsible for that default because it still is, tied to their VA entitlement?
Yes,
That's a good question.
Yeah, great question. So from a financial standpoint, the seller is removed from all liability. So it's not like they need to make the lender whole. However, if the buyer who assumes the seller's VA loan, if they foreclose, if they get a foreclosure on that home, then the entitlement is wiped. So the entitlement disappears, but it's not like the seller will have a financial obligation to cure the loan. They just can't use that entitlement. And that's definitely scary. The entitlement is effectively tied up for the remainder of the loan anyway. So you can think of it as, having a 25-year or 20 to 25-year tail at the point of closing.
Yeah, and here's another thing too. If it does any VA loan, if a vet goes into foreclosure, unlike other loans, it only they have to wait 3 years and they're able to get their full entitlement. They can apply to get their full entitlement back. So that's kind of a little cheat sheet. A lot of folks, and I know this because I had a client who went into foreclosure and he called me because it was 3 years and 10 days and he said he got his entitlement back. So that's the way you find out these things going from there. And I think that's it. So yeah, so I think that was, one of the big things with seller strategy. And then now I'm going to breeze through this and then you guys stay on here. So 5 steps to assumption success, spot and assumable opportunities. So look for FHA, VA, USDA loans from 2020 to 2022. Would you agree with me, Ben? That was the sweet spot of the low interest rate.
Very sweet.
So very sweet. Check pre-foreclosures and stale listings. Now, one thing, I don't know if you guys caught what Rome said earlier, but they have on their website where you can look up any address in the US to see what type of loan is on there. I'm naturally nosy, so I'm gonna use that all day long. Now we can, even if you're outside, you can use RPR and some of the other ones too that we have, but that's probably a quicker, just in and out and going from there. There's some other programs out there too, but Alexis is working on a special project for me. And once we get that one complete, we'll share it with everybody else. So, and going from there. Now, you also want to confirm that you can, assume that loan too. So, we want to make sure that we're talking with the lender is key from the very beginning. Pre-qualify that buyer early. Now, when I say that, before you start down this road of loan assumption, talking with Rome, talking with the existing lender, you want to make sure that that buyer is well qualified to be able to assume that. Because if not, it's just going to be, you don't want to be 30, 45 days ready to close and something pops up. So, and they're going to have to qualify through the existing lender who has it, and also through Rome for that secondary if they need that gap money going from there. Now, all of the ones I closed, everybody came up with the money because they had it somewhere else. So they, went from there. But that was the folks who closed. I probably had 40 people who wanted the house, but there wasn't a solution like Rome there for them. So just something to think about. And bridge the equity gap. That's one of the things. Explore blended financing options. So I think that's what Ben and Alexis were just talking to us about. And of course, we talked about innovation. We have another question. Carol asked, how does a vet on active duty military person find out how much entitlement they have? How long does this take? So, Carol, are you saying they already have a home or they have never used their entitlement? Because if they have never used their entitlement, they have 100% of entitlement that they can use, right? But if they've already used it, then they could, easily, any lender, a partner that you have, you can actually have a conversation with them and they'll be able to really, tell them how much they have as far as entitlement wise. And then does Rome work in every state?
We're not active in every state, but we are active in the most active home buying markets. So we can share the list of states that we're active in.
Okay,
That's just
perfect.
for advertising homes that are suitable. If you are not in one of
Hey,
our
Alexis, you're on mute.
Sorry.
Oh, there.
We're in the same room, so you know how that goes.
Yes.
We are not advertising assumable homes in every market. However, if you are outside of our listed markets, we do still help you with that transaction. We can still help you provide marketing materials. We can still look up all the loan details. We just don't advertise those homes on our website. And I see someone did say California, and we are in California currently. Damien, I know that we need to go to Montana. We're on our way there soon, hopefully.
Oh, Damon, he was gonna pop in with that. So, what about when you close and you sell your? Okay, what about when you close and you sell your loan to someone else? So, I guess that's for you guys. Rome, do you guys hold your own paper, or do you sell it on the open market?
Okay, I can answer. So just want to clarify. So Rome is not a lender. We are a third-party platform whose mission it is to get buyers into homes with low rates. So we work with the existing lender for the assumption, and then we have a lending partner we work with for the secondary loan. So in terms of like holding, we don't hold any loans ourselves. And it's possible that like the loan can be sold or switch servicers, but once you've actually secured the loan or the two loans, like your monthly payment is set in stone through the duration of the term.
Yeah. And then I think Carol was following back up. So yeah, Carol, you said first time home buyers that so they have 100% of their entitlement. So whatever they can qualify for to buy, typically if that lender lets them go up to $1 million, $1.5 million, it's time to go. So I hope that helps. Yeah. Damon said Montana, California. Ben just posted inside of the chat, guys, the markets. So that'll help. Sylvia, being that Texas has crazy rules, are you there? I think they are in Texas.
Texas is our biggest state.
There you go. They're in the Wild Wild West. So, and the bank sell it. No, I'm saying the person after you close, the lender sells the loan. So yes, so the lender, there's nothing they can do after they Rome partners, and then that partner may sell the loan, but your client will be locked into whatever the terms of right. Okay. And then, okay, this may be a silly question, but what is the best way to present to a seller? Oh, Alexandria, that is not a silly question. That is like the gold question that everybody is thinking about. It's very easy because when you go in there and you're competing with 3 other agents and you start talking through, I would take their marketing material that Rome has, verse yourself into talking about loan assumptions, bring up the website, show the different ways, show, hey, you will be one of the only ones marketed as this in our, I would look at my local stats to show, and you show what you're doing different than everyone else, because that's a differentiator that if these other agents, like I said, there was only 16 out of almost 20,000 agents in the markets that I'm in that actually had that in their listing presentation. So that will set you far above everyone else. Even if you go in there and you start talking loan assumption, your sellers don't even know what a loan assumption is. So you're going to naturally sound like the smartest person in the room. And then you give them some examples and you go from there. And I think that's the best way.
Yeah.
And I mean, Alexis, did you want to?
Eric, I mean, you took the words right out of my mouth. And the one other thing that I might pitch to the seller, I know that Eric had this as maybe one of the objections that a seller might say, is that they're scared to be locked into the home. And as Eric mentioned, sellers can be scared away because they've heard that assumptions take 120 days, 160 days, but we are aligned with Eric's 45 to 60 day timeline. And we do also offer a seller protection plan that says if we take longer than 45 days to close, we will pay the seller's mortgage until we do close. So that's another little insurance that you can give that seller.
If you take longer than how long again, Alexis?
Longer than 45 days.
So longer than 45 days, you guys cover the mortgage for the seller until it closes.
Correct.
Okay. That is powerful there. I'm just going through the questions regarding getting the lender confirmation. Is that something an agent does working with the seller? Yes, you can get that through, because the lender is not going to talk to you. I'm gonna just let you guys know that now. You're going to have to get some type of authorization from your seller, because of course that is personal financial information. So once they authorize you, just have your clients authorize you to talk directly to someone at the bank so that you can go from there. Now, Rome actually does that for you on that side too. So that's actually a help. I was doing all my stuff just myself because I've done them, but it would have been much easier. I don't really want to spend time on the phone, talking and trying to get the right person and sending the different emails and faxing in the authorization so that, I can talk to them, because that's exactly how it works. They want faxes. So, so that's something easy. And Rome actually takes it out. Do we use our EXP login to get into Rome?
You should create a separate login to get into Rome.
Cool. Perfect. And then is Rome totally exclusive to EXP, or can other brokerages use this service?
While we do love our EXP agents, we are open to all agents. So other brokerages are more than welcome to reach out to us and use our services. Now, all the benefits might not be exactly the same, I must say, but we are open to all agents.
So, and I think we touched on some of these. I brought up the next slide here, guys. Lead gen tactics for this, geo farming. If you're looking for VA loans, I'm gonna just be honest with you. Focus on the military bases, because that's where the largest concentration of veterans are. So that's where they're going to be. So if you are in those markets or close to those markets, you can geo farm in those areas. You're talking, Fort Bragg, Fort Jackson. I'm just driving down on the East Coast right now, Fort Gordon, and you keep going, Fort Rucker, Killeen. You can find it. It's easy. Expired listings. So when we talk VA loan and loan assumptions, expired listings are huge, because if it was there. Oh, someone is moving my slides. They're leaning on my slides there. Are they moving me along? No. Okay. My slides started moving. Sorry, guys. So expired listings, you can actually do that too, because if that person looked for, and I did a search last night, you can search within RPR or some of your other tools. Do a search for VA, FHA, or USDA loans. Search for those who are, no longer in your area. So out of state, out of market. Now, those are who I would focus on. Those who have out of state, because that loan is sitting somewhere. They may not want to rent it out, but it's sitting back in North Carolina, and they're now out there with Damon in Montana, and they're tired of, they may want to say, hey, look, I want to get rid of that property now. You know what? I want to give a little bit of my entitlement. I'll let someone assume it so I can cash out and go build my, perfect home in Jackson Hole, Wyoming, because that's what they want to do. And believe it or not, many people will do that just to get it back. So digital marketing ideas, use keywords like assumable home mortgage. Once you start talking about this online, you're going to attract listings and sellers, talk the language, learn as much as you can, talk the language, look at the stuff that Rome's giving you. You don't be the expert, be the source of the source, but not the source, and you will win all day long. Also, share real client stories with savings and boost your listing presentation, Mr. and Mrs. Seller. I think someone was asking this. Your 2.75 VA loan is more than a mortgage. It's a buyer magnet. Let's turn your low rate into your dollars and go from there. And then handling buyer pushback. Buyers are always going to say, I'm waiting for the rates to drop. If you use a solution like Rome, you don't have to worry about that right now because they can still refi later if they wanted to. And too much cash needed. We don't have to. This was my slide beforehand. So we have those financing options there. Let's see here. I think we had a couple other questions. Is EXP our favorite? What is your contact information? They're asking for you guys. Ben already put it in there. Eric, can I follow up with you later, please? Yes, you can, Carol. Look up addresses, and you put that lookup address for any. So guys, while we're on the call right now going through this, click on that link that Alexis just put in there and go look up your own home address and see if it's, trust but verify, because you should know what your type of loan is. And then agent risk management, protect yourself. Always use the lender contingency clause where you're always saying it's always contingent upon what? Lender approval. Run a full title search early. Don't get surprised. So the seller may tell you they only have one lien on that property and maybe multiple liens, especially with a lot of the down payment assistance or other things that are going towards some of these FHAs and everything else. Make sure you have that part. And you can run a title search, talk to if you're in an attorney state, talk to the attorneys. They can do a soft run for you. If you're in an escrow state, talk to your escrow officer. They'll do it for you also. Work with right lenders, partner with those who specialize in assumptions like Rome. And you can do classes. Once you start doing and you learn the basics, if you do classes or webinars or whatever to the general public, the people will come. And that will be huge. Now, comparison table for the loans, if you look at the type, conventional loans, appraisal, usually on an assumable loan, oftentimes that appraisal is waived because they're already into it. Origination is usually 1% to 2%, 0.5% to 1%, processing fee $1,200. These are just some general numbers I wanted to put in there for you guys. I think we have a couple more questions here. Sylvia said portfolio. I don't know what that means, but she'll come back. Sylvia, if you can retype what you wanted to ask, and then are the interest rates on the Rome site the blended rate?
So when you first log onto the website, before you enter any personal information, those are the assumable rates by themselves. If you click into a listing or you search and you do a filter and you put down how much you want to put down as a payment, then all of the rates will automatically change to the blended rates. And we do have calculators that let you play around with how much you want to put down versus in dollar amount versus percentage. So when you first log on, it's just the assumed rate. But once you start playing around and putting numbers in there, that's when you start to see that interest rate become the blended rate.
Perfect. And then I think some folks were saying that some of the addresses didn't pop up on there. But I think you guys can circle back on with them on that, right, guys, to see kind of why. And are you guys in Alabama?
We are in Alabama.
Okay, cool beans. So they're in Alabama now. So takeaways. Look, you guys can really stand out in your market. And here's the thing: the reason we bring these trainings is so that you guys can really, really take it. Now, don't just come to trainings to come to trainings. Actually take the information, take these resources. Rome, we've basically just given you the solution that takes away all of the risk. The marketing, you can now go out and market to. And here's the other thing, guys. Go into MLS and see what sold during that time frame. Once you sell that property, that client is no longer yours. And most of the time, what's the stat? 80% of the people will use the same realtor that sold them the house if they knew who that realtor was and if they stayed in contact with them. So you could be sitting on the gold mine just by doing an MLS search to find those who had assumable loans during that time frame and go in the market to them. You would definitely be able to pull that and get more information on that too. So now, thanks for the training, really good stuff, lots of good stuff, Eric. How do I get in contact with you? I'll post my information in the chat here in just a second. Is there anything that will disqualify someone even though they've qualified for the now Edwidge, is there anything that would disqualify someone even though they've qualified for the assumption? I don't know if that's a Ben, is there anything that would disqualify someone?
If a lender approves the buyer, they should be good to go. If the loan is not current, the lender may not allow for an assumption, but that is like before the process is started. Some lenders will allow the seller to true up the loan at closing, and some will just not allow the assumption process to commence. But once you're qualified as once you're conditionally approved and you satisfy those conditions, you should be good to go.
Okay, and that's a good point too. Now, catch these folks before they get into financial trouble, because a lot of they will say, hey, we'll consider it once you catch up the loan. And if they're $5,000, $10,000, $20,000 behind, you may need to come up with a different solution because you might not be able to assume it, because like Ben said, some of the lenders will not allow that. Sylvia, good to know there's a company that does this in the short period I've done. Okay, perfect. And then I'm gonna sign in and Austin. Okay. She's unable. So anybody who said they had address issues or unable to sign into the site, take down, I think you guys have Alexis's email there. Send her an email. She'll definitely get you guys. Oh, there it is. She'll get you guys all taken care of. So now the first place you need to start with this is going back and looking at your own database. Who bought a home from you that has a 2, 3, or 4%, FHA, VA, or USDA loan? Start within your own network, because if not, guys like me are going to be touching your people and you haven't even touched them and you're trying to go get these new people. So I would start there first, and then just have a conversation with them. And I think that was might have been my last slide. Yeah. Q&A session, but we're already in the middle of a Q&A session. So Ben, Alexis, did you guys have anything else that you wanted to add to it? I'm gonna do a little final. Go ahead.
Eric, this has been a great session, and I was gonna say that we need to get you on our team, but we're already working on that. So the only other thing that I wanted to highlight is that we are doing a special promotion where on your first deal, agents will get an extra $2,000 with us when they close. So take advantage of that.
Alexis, here's the thing. Agents are good with, simple math, like 2%, 3%, 4%, 10%, when it comes to commissions. So if, let's say there's a home on the market, let's talk numbers. So you say what? So there's a home on the market, and say like you're saying on the list side or the buy side, on the buy side, correct?
Either side.
Either side. Okay. Say I'm gonna say 3% commission, for the buy side. I'm getting 3%. House is $500,000. I'm getting $15,000. Now that's the standard that they're offering. Now, what additional, or how do I get paid from Rome? How does my 15,000
turn into 17,000? If you are a listing agent and you advertise Rome in your assumable mortgage, and you bring us a buyer who will use Rome, and we close on that sale, you now get $17,000. That's $2,000 on top of that $15,000 commission. If you take your buyer shopping on Rome and you do a deal with Rome, that's $17,000 in your pocket, $2,000 from us. Does that help with the simple math?
It does, but it doesn't.
Oh, okay, wait.
Because you know I was going to give you a hard time. Ben, you're
I
going to give a
knew.
backup on this one.
I knew.
So, you know, let's say Michelle and I, we're in a cross sale. So we have our cross sale going. I brought the seller to Rome. We're advertising on Rome. Michelle brings the buyer, and the buyer is going to assume. So now, does Michelle get her $2,000 in addition? So she's getting 17, and I'm getting my 17 too because it's two different clients.
This is a very unique situation, and you love to ask about unique situations. If it comes down to it, where you both were informed about Rome and you decided to partner together to do this with Rome, we will pay you, and it's both of your first sales, first sale only. Don't try to milk us, first sale only. We will pay both the buyer's agent and the listing agent in this deal $2,000.
Now, what happens for my second, third, and fourth sale? How much do I get paid from there? I'm asking questions that I know the audience is probably, Michelle will go over there like, yep. What happens next?
So the promo doesn't last for every sale, but you know how we talked about this is the gold mine, and that you can get 5% more for your listing should it be assumable. So think of it that way, and that your commission is up leveled, and that you can raise that purchase price when you're advertising an assumable loan.
Okay. Sounds good. That was a nice dodge. I like that. So, I just want to encourage everyone to, there's no excuse not to be doing assumables. And like I said, it's 1.7 trillion. That's how many USDA, FHA, and VA. And let me tell you, lenders love those because they're government backed. And if the person goes into foreclosure, the government is going to make that lender whole. So that's one of the reasons they love government loans all day long. So yes, everybody really needs to take advantage. If you go out, there is someone there's an assumable loan less than 1 mile from where you live. I can guarantee you that. Right, Ben? So Michelle, I'll turn it back over to Michelle. She'll kind of bring us all together as she does.
I'm still over here taking notes for you guys because I'm trying to come after what Alexis just gave us. I'm like, wait, what? Extra money? We always love extra money. Okay. So I love that little tidbit. So you've gotten a lot of these questions about being in different states. So I'm in New Jersey and New York. I believe you guys are not quite here yet. So where can an agent see all of the states that you're currently in and the projections to when you're going to be in those states?
Great question. If they want to see the states that we're currently in, they can go to withrome.com/markets. And that link that I sent earlier where you're able to look up an address, that works across the nation. So it does only tell you if it's an assumable loan. If you have a conventional loan, it won't say exactly the terms of your conventional loan, but it will say this is an assumable loan. So even if you're not in the markets that we're currently advertising in, I encourage you to put addresses in. And once you find an assumable loan that you're working on, come to us and we'll help you with that.
Okay, yes, that is very helpful because you're going to get a lot of people like, come on, when are you going to be in our state? So thank you for that. Thank you for that for sure. Okay, and then does Rome provide any marketing material for agents?
Yes, we do. We provide free sign writers that let you advertise the assumable rate. We can provide open house flyers. We can help work with you to craft your pitch particular to a listing. And then when you do look up those addresses, you can actually download some flyers that are personalized to that listing that can help explain what assumable is to your seller.
Wow. You're going to be hearing from me soon too. Yes, I am going to be utilizing this product before the end of this year. Let me see what I could do because I am an Army brat myself. So this is right up my lane.
Right up your lane. And Michelle, you know, it's funny you say that because here's the thing. If your clients use Rome, great. If they don't, you're in front of them, but you gave them the option and you still get the listing. You still get the buyer. Those are great opportunities, and you have it there, but now you have this secret sauce in your back pocket that you can pull out.
Yep, you got it.
I think was there another question? I don't want to not Ashley asked about You always disclose, Ashley. She was asking about the 2000. Don't call it a kickback. It's a bonus. It's a, for working hard, but you always disclose on any type. I'm sure there's some type of disclosure that we would have to do. And then Damon, incredible Roman, thank you again. Oh, Damon says, thank you for sponsoring the Juneteenth, and we look forward to you sponsoring the yacht party. So,
Okay, David. I don't know if we did that just yet, but we'll follow up. We'll circle back.
He said he looks forward to seeing you at the yacht party. I said sponsor. I'm sorry. Freudian slip.
That was a shameless
representative.
That was a shameless plug. Yes, Rome. You know what? I'm going to wrap it up with Rome, but you guys have been phenomenal. Thank you for joining us. And thank you for supporting us at Black EXP Network. You guys are one of our major sponsors. And, we're going to keep having events, and we're going to keep putting you on this platform so that you can really reach more people, because not enough people know about Rome. So this was great. Thank you so much, Ben. Thank you so much, Ms. Alexis. Thank you for joining us today. I'm so grateful that you were able to come. Thank you.
Bye.
So, Eric.
Yes.
I'm not done with you, Eric.
Oh, yes, ma'am. Yes, ma'am. Yes, ma'am. I'm still here.
Thank you so much with all that information that you just gave. I mean, I know some agents ask a lot of questions, and you answered a lot of questions. I got like one or two maybe questions for you. And if anybody else has any questions for Eric, drop it in the chat, and I'll make sure I get to that. But, as a veteran, right?
Yes.
And an expert with the VA loans right now. That's what you sounded like to me, for sure.
Oh, yeah.
What do you think is the biggest opportunities that agents are missing when it comes to VA loan assumptions in today's market?
For VA loan assumptions, I think agents are not paying attention. Like, if you're not in a VA market, people kind of, it's VA, because most people are in these conventional markets. You know that. I mean, your market is more conventional, right?
We got a mixture.
You have a mixture. So like, you don't have a huge military, base or anything around you, but you have a ton of veterans that have those opportunities. And I think agents are missing that part, where just because you're not in a large military area, that VA loan is liquid gold to lenders. They absolutely love that, because they know they'll always get their money if there's anything that happens. And for loan assumptions, that is absolutely liquid gold for anybody who's doing any type of marketing for it. So I would just encourage more folks to focus on that make that a little part of your niche, veterans, just pop it in there. Everybody loves, veterans. Everybody loves, hey, you served. But there are a ton of veterans who have not even used their VA loans, because they went into, more commercial, and they, were making money. So they were, hey, I'm gonna do a conventional. But there's a ton of veterans who have never used their VA loan. They should use their VA loan, because remember that VA loan, they can buy up to a 4-unit with that VA loan. So if they can assume something up to a 4-unit, that would be great. Or, a duplex, quad, or whatever, triplex. But if they, the VA loan is that the one thing, no matter what anybody's political, side is, or what they believe one way or the other, the one thing I can always guarantee is that the service members and vets are always going to get paid. When we went through the big 2008 crash, where everybody else's market was going down, that's when I started my independent company in October 2008, when the crash was happening. And for the next 3 years, I sold more real estate than I had ever sold in my entire life. So much so, that's when I sold my company, because they wanted to, come, because the vets were still at 100%. They weren't paying any closing costs, and they had an $8,000 tax credit. Like, just pay attention to the market. But if you notice, the veteran home ownership never drops, because they're always gainfully employed by Uncle Sam.
That's right.
So just, food for thought.
That is pure facts. If people really heard what you just said, you know what? They would grab onto some vets. Get closer
quickly
to military bases.
Yes, no, absolutely. Because it's a ton of folks who are just right there, and a ton of assumable opportunities right there too, as vets are passing away too. And, those homes, you can assume those loans. If it's an estate sale, you'd be like, oh, well, the person passed away and, they had a VA loan. Hey, can I assume that?
Mhm.
There you go. Assume the loan and go from there.
Good job. Good job. I
So,
love it. This will be my last question just to take us home.
yes, ma'am.
Take us home. I know you've bought about what you said 250 agents now. You've grown your
Yeah,
organization,
we're
right?
growing. We are growing.
That's wonderful. So, under your leadership, right? What would you say is the best advice that you would give to an agent to stay focused and profitable? What kind of core mindsets and strategies do you think that will really help agents to separate them and to become high performing agents?
I think not being afraid to actually ask questions when you don't know the answers. A lot of times we want to pretend or try to, in our culture, in our community, just be real right now, because we all grew up trying to, hey, we can do it on our own, right? We can do it on our own. I don't want to do it on my own. Yes, we have, that many agents that's part of our community, but just because I'm here, it's really like, the Blairs and the Daves and the Felicias, and it's a community. And guess what? I share things even when they don't even ask me to share things. So if there's something that I find out and that I know, or an opportunity, like they have to, and I'm gonna steal Dave's line, stay around the fire, right? Because that's one of the things he always says too, and one of the things that we believe in is you have to stay in a community and in an environment that you can actually have that conversation about what's going on. Because a lot of us come in here and we go lone soldier. You can't be a lone soldier. You have to have a community where you can actually ask the questions, and no matter what the question is, know that that community will be there to answer it for you, because that is truly how we can grow. Because you don't know everything, but you know somebody who does know something about a particular topic. Partner with them, talk to them, work with them, and go from there. So that's my thing. Like, I always come from a point of service in helping agents out. Agents call me that were part of the offices I ran years ago, and I still answer their questions just like they're part of EXP, because guess what? One day they might be. So that's the way I look at it.
Yeah, yep. It sounds like you're just saying you need to get in sync with your tribe, right?
You have to get in sync with your tribe and focus on what you do best, not what Michelle can do best, not what Eric can do best, but what you're naturally gifted at. Because if you do what you're naturally gifted at, it comes easy to you.
Yep, that's very true. Be authentic, genuine and authentic. That's all
Amen.
people want. And that's how you attract people to you. Clients, agents, whoever it is.
Your people are meant for you and they will find you.
Thank you. Thank you. That was the last little nugget I just wanted you to drop on the folks here. You know what, Eric? Thank you so much for coming in today. I think a lot of people got a lot of gems out of this.
Well, I hope so. Yeah, I hope so. I mean, this is a phenomenal platform, I think, that you have been leading, here. And I want to thank you guys again for, inviting me to share a little bit and going from there. And then anything you guys need, just, reach out. I posted my information there, and I'm sure you guys can all come back to here, and we have our network and our B.E.N tribe. And I can't wait for I cannot wait for Miami and EXPCon. I am looking forward to that, and to meeting and networking with everyone.
Yes. We look forward to seeing you at EXPCon as well. Thank you so much, Eric, for your time.
All right, guys.
Today. Have a wonderful day.
Hey, you too now. Thanks, Michelle.
You're very welcome. Listen, you guys, get in sync with your tribe. Get connected with your tribe. That is the biggest thing that we need to make sure that we're doing now. And I show up for you guys every single month to bring you what you need, the tools and resources that you need, right? So I want for you, whoever's left here with me today, we have some trainings coming up, but let me know in the chat right now, what other trainings do you want to see coming up? Because we got some things coming up for your systems. We got training coming up for your social media. We have training coming up for so many different things. Our next training is actually on NAR. So tell me in the chat, what else you guys want to see as far as your tribe trainings. I want to know. I need to know. I'm going to be sending y'all a survey real soon because I want to see what you guys want. You know, I can only do but so much. All right. Somebody put Asian attraction in the chat. All right. We can see about that. We definitely can see about that. What else y'all got for me? What else do y'all have for me? It's so tiny on this screen, but I'm here. I'm here. So next tribe training is going to be about the NAR settlement. How y'all been hanging in there since the NAR settlement happened, huh? Has everybody been still doing deals? I see you guys that still have your real estate license, and I'm proud of you. Keep it up, because the NAR settlement, if anybody really knows how much that was a blessing for agents to really get a pay raise at this point, you know? Somebody put they want to know about open houses, team building. Okay, I'm taking note. I'm taking note. Walking through the listing step by step. Okay, all right. We got coaches for that too. Okay, that sounds good. What else do we got here? Collaborative investments. Okay, all right. Somebody's asking me for the link to the Slack page. Somebody give her the link to the Slack page. She wants to join. All right. So I think that is all that we have. Mario, do we have our flyer for our next tribe training? We're here to build a legacy, you guys. This is the point, and this is why I'm asking you guys all of these little things that you want to see. So I'm definitely taking note, and thank you for all who have participated. Thank you, everyone, for just staying in tune and giving me some feedback. You know, I don't like being up here talking to myself. I need y'all to talk to me, right? Talk to me. So thank you. Thank you. Oh, thank you. Somebody invited Michael. Thank you for joining us, Michael. Make sure you invite somebody else. Make sure you invite 2 more people the next time that you join, for sure. How we looking there, Mario? I don't know if we looking at all, but NAR training is what's going to be next. Not a problem. So we're going to have our NAR training next. We're going to have our very own EXP corporate will be here, and it is Lauren Coleman. She's going to be showing us exactly, some of the ins and outs of what has happened with NAR and how it can be utilized as an advantage to you guys to be able to get your clients successfully through this market. It's not a big deal. It really isn't. It's actually giving some agents, like I said, a pay raise. So you want to learn some strategies to win in this market. I mean, I just had a closing last week at 7%. Okay. 4% on the seller side, 3% on the buy side. It is possible. And if you guys want to know how you can do this, you need to tap in. So next tribe training is going to be August the 12th, 7 p.m. Eastern. We're going to have our very own Lauren Coleman on our call. So we look forward to seeing everyone. You already know that you can join us by clicking on the link in our bio on Instagram and get yourself registered for our very next tribe training. Make sure you share. Sharing is caring, you guys. I want to see our rooms double from now on. So I'm so happy that everybody has joined us today. I hope you have gotten great value out of this. Let's build a legacy together, you guys, and I will see you again soon. Have a wonderful day. Ciao for now.